Geo.
Good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me is Surbhi Upadhyay. The first trading day of 2021, the first of the decade, and markets have opened up well. The Nifty is comfortably perched above that 14,000 mark at a fresh high. The mid-caps are racing away. It's close to a 1% rally on the mid-cap index as we speak. The monthly auto sales numbers which have trickled in, it's looking good. Maruti's reported a 20% jump in their sales numbers. Escorts up 88%. The commentary from Escorts is also optimistic, confident, because they are talking about the supply side issues getting ironed out. So all in all, this has been an absolutely fantastic start to the new year. Surbhi, it looks like the party is continued into 2021. No hangover as of now.
No, none whatsoever. Reema, good morning to you and Happy New Year to you and to all our viewers. And look at the Nifty and the Sensex. They are in their own galaxy. Isn't that so? I mean, the Nifty is so comfortable above the 14,000 mark and the Sensex is marching away. Looks like it's got 48,000 on its mind. Let's not forget the grand old index. And it's fairly well balanced. Autos, as Reema mentioned, is one sector that's doing really well. IT is keeping it good company. You know, on the downside, of course, volumes are thin, but still to just track the trends, you've got, ICICI Bank, which is the only real sore spot today, losing about 0.75%. Anyway, we have a lot of ground to cover and a lot of very, very interesting voices coming up for you. And let's get straight to it then. This is our big interview of the morning on Trading Hour. Shankar Sharma, Vice Chairman and Joint Managing Director at First Global, is joining in. Shankar, allow me, first of all, season's greetings to you and wish you a very, very happy new year. It's been a phenomenal ride, right, the last 12 months. And allow me to go back to one of your tweets. Actually, it's a tweet from First Global, which Reema pulled out. And allow me to state this, and maybe our viewers can look at it. Bear markets teach you how to gain discipline. Bull markets teach you how to lose it. So as we speak on the 1st of January, 2021, where are we in this cycle?
So I heartily reciprocate the season's greetings, and I wish all of you at CNBC and all the viewers watching the show, a wonderful 2021. And I do hope that, we don't go back to the March kind of situation, not just from a market perspective, but from a overall economy and health perspective, what we saw in the month of March and subsequently as well, because we must not forget that this year, last year was a very, very painful year for a very, very large percentage of global population, Indian population. So let's also spare a thought for them. Coming to your question, India, if you talk India itself, so India was up, I think, about 14-15% for the year in 2020. And most interestingly, I think almost all the gains came in October, November, and December. So if you looked at India till September 30th, okay, India was around flat for the year, okay, for the entire year. From January till September, it was a very late sprint, which India started from October, continued in November, and December was also a decent month, I think 7-8% up, which has propelled India to finishing the year with a 15% calendar year gain, which again, understand this. If you see 2020, 2019, 2018, 2018 was a down year for India. I think it was down maybe 3 or 4%. 2019 was, I think, about 6 or 7% up, which was very, very low compared to the rest of the world, because the rest of the world had a massive bull market in 2019. 2020 is where India, especially in the last quarter, has started to show signs of life. And I think that's a very good sign. I think that augurs well for this year. I think this year, India is cyclically due for a good year because it has had 3 fairly tepid years, 2018, 2019, and 2020 also in context of some other global markets. India has done not a great deal because some other markets have done phenomenally well, like Vietnam is up nearly 50%. So India is cyclically due for a good 2021. And I think all the factors are aligned. Most importantly, low interest rates. because we have seen interest rates of this kind only back in 2004, and we know what happened subsequently. I'm not making a call that we'll compound 50% like we did in 2004, 5, 6, 7. But we will take a 15% compounding from here on. I think the stage is set for a very decent 2021.
Well, that's good to start the interview with. Shankar, before we delve more into the equities, I wanted to get your thoughts in on Bitcoin. That's clearly established itself as a mainstream asset class. It's tripled in 2020, just in the last month of December itself. It's clocked in close to a 50% rally. I believe you own it in your portfolios. How do you see 2021 for Bitcoin in terms of performance? And can retail investors get in at these levels?
So I don't want to make a recommendation, especially for things like Bitcoin, because it's still an asset class, or if you call it a currency, which is very new. A lot of the systems around that are still getting understood by people. But I mean, it has been just unbelievable. And from September, I think it was 12 or 13,000, 14,000 in September. It's like nearly 30,000 today. I mean, it has been unbelievable, completely off the chart. So yeah, so we do own it. And one of the reasons why we own it is, it's not that we just speculated on Bitcoin and we thought it was going to go up and, we were going to just blindly bought it. That's not the reason. The reason is this, that after a 10-year bull market in the US dollar, we have seen 2020 marking the beginning of at least a cyclical bear market in the US dollar. So we have seen US dollar correct sharply against the euro, sharply against the Taiwan dollar, sharply against, practically, against the yuan, against most currencies. And that tells you that you need to be getting into assets and trades which are not just US dollar denominated. So you need to have diversification outside of pure US dollar plays. And that's one of the reasons why in our global funds, we moved away from US equities in large part from the middle of the year into other non-US equities. And that has helped us a lot. We have had European equities, Eurozone, and Bitcoin came out of that because Bitcoin appeared the strongest of the things on the other side of the seesaw as far as the US dollar is concerned. So, we like it right now, but it's a very volatile, currency. I mean, it can fall 20%, in a day, as we've seen it do, just about a month back. So the whole trade in 2020 was move away from pure US dollar plays into non-US dollar, and Bitcoin was right in the middle of it.
Okay, I understand that point. So, Shankar, let's get back to our first love, equities. And while it sounds wonderful to hear you say that 2021 cyclically should be a good year for India and for the Indian market, let me ask you this. Is too much consensus a risk? I mean, in your investing career, and it's a long, wonderful one at that, when is the last time you remember the market being in almost uniform consensus? It's like there's no bear out there. No one's talking of risks. Everyone's talking of the positives. And I wonder if that should make us a little scared?
Yes, it should. It should scare us. And, I mean, I can only tell you the way we are looking at it. And I personally think as well that, when there is such big consensus, big agreement on where the markets are going to go, at least even if it's temporary, markets can give you a big jolt. And I think, you could be due for that. It could happen as early as next week, or it could happen in the month of January sometime. But I just think, a 60-70% rally from the lows as we have seen, and not just India, but practically most markets, did that from the March lows. I think it's just unsustainable to imagine that we'll get another 20% on top of this without any correction whatsoever. So, we should, as investors, and more importantly, as prudent investors, be approaching this market with optimism. But as I always say, when you're going out and there is a forecast for some rain, take a raincoat or an umbrella along. You may not need it, but it doesn't mean that you were foolish if you took it out with yourself. So I think you should be prepared for a surprisingly let's say, vicious cut, even if temporary. But I don't think it will last much. I don't think it can really derail what we are seeing right now. And that, I think, comes out of basically one simple thing. When you have global interest rates, Indian interest rates, down to these levels, I mean, it simply is that the equity end is at the other end of the seesaw. So equities go up when rates go down. I mean, beyond every analysis, you want to see that underpins, core analysis, right? And that's exactly where we are right now. I mean, I don't see interest rates going up in India. I don't see them going up globally. And if that doesn't happen, then equity markets are only one way to go.
Okay, so we are in a cyclically good place, but one should not rule out a vicious correction, though it's likely to be temporary. Shankar, do stay on. We've got lots more questions for you in terms of how to approach your portfolio in 2021, the sectoral bets one should consider, the themes to look at, the IPO markets, lots more to discuss, but we need to slip into a very short commercial break. Stay with us.
फर्नीचर सिर्फ सेंचुरी लैमिनेट्स और प्लाईवुड से बना है। इन दोनों में है वायरकल टेक्नोलॉजी, जिसके एक्टिवेटेड नैनो पार्टिकल्स वायरस को मार गिराते हैं। सेंचुरी लैमिनेट्स और सेंचुरी प्लाई।
Union Bank wishes you all a very happy and prosperous New Year 2021.
Congratulations, Rahul.
Thank you.
आज से ये चेयर तुम्हारी।
It's an honor, sir. But sir, इतनी बड़ी जिम्मेदारी, पता नहीं स्टाफ मुझे पसंद करेगा कि नहीं।
तुम उनका ख्याल रखोगे ना राहुल, तो वो तुम्हारा और कंपनी का ख्याल रखेंगे। Here's a good way to show you care. LIC's pension and group scheme. पेंशन, ग्रेच्युटी और रिटायरमेंट बेनिफिट्स आसानी से मैनेज करता है।
मतलब एम्प्लॉइज खुश तो कंपनी भी खुश।
To Orissa, India's best kept secret.
आपका विश्वास हमारी शक्ति, आपके सुनहरे सपनों के लिए समर्पित। कैनरा बैंक उत्पादों की शानदार कड़ी, आपके लिए, आपके साथ, नया साल, साल दर साल। कैनरा बैंक, टुगेदर वी कैन।
Welcome back. You are with us in Trading Hour on the very first day of 2021, and we are in conversation with Shankar Sharma. So, Shankar, now that we've discussed the overall backdrop for the market, let's get to what will make us money within the equity space here in India this year, right? And I go back to a conversation that we had a few weeks back, I think it was end November or early December, and we were asking you whether you see enough signs of this whole cyclical play finally becoming a reality after, maybe a decade. Now, a couple more weeks down, more commentaries from companies, etc. later. What do you say? Are you any more convinced?
So, again, from a tactical perspective, we are playing the cyclical. So we have some autos. We have had a very good run on the metal plays. In India, you have a limited choice. You have JSW, Tata Steel, and Hindalco, and all that, and we have played all of them, and they've done very well. We have played cement as well. We have not played the banks because we have nothing against the banks. I've been a bank in my life, so it's just that RBI's commentary on the banks, credit quality, if when the moratorium goes, is again a cause for concern. So you can play cyclicals without taking excessive risk, and we are playing that without taking a lot of leverage or leverage plays. So I think autos, cement, steel, if you are brave, you want to go and buy realty, by all means do that. But that's not a recommendation again. But many people tell me that, real estate sales are doing very well in India, etc. I have no ways of verifying that and whether that is sustainable or it's just a pent-up demand getting exhausted, in a matter of a couple of months. But there are safer areas where you're buying with some Just before I came on, you were mentioning Escorts, which is again a company we own. It's done very well for us because rural Indian, side of the demand, remains very, very robust based on all the data and conversations that we have. So there are ways to play the recovery trade. And remember, I don't think it's as if you have to play only these or that IT and pharma, which were stellar performers last year, 2020. In fact, if you see the data for 2020, the most interesting thing is that with all the sound and fury, banks were overall. The Nifty Bank, I think, is still -2% for the year, last year. While IT and pharma were up 30, 40, 50, 60%, something massively up. I don't think you need to go away from that. You can simply trim them and go into some of the recovery plays that you mentioned and that I also mentioned. And I think when you're buying things like the metal plays, you're buying them with a big global boom, in commodity prices. Again, you're buying it with the confidence that the weak dollar trade is propelling commodities higher, and therefore you're on a very sound footing when you're buying a local Indian company like JSW or a Tata Steel or a Hindalco. So there are ways to play the recovery trade, there are ways to play cyclicals, and the way we have played it is exactly what I just mentioned, without getting into relatively more, the riskier end, which is the leveraged financials, banks and NBFCs.
I wanted to get your thoughts on the primary markets. Now, 2020 has seen an IPO boom, and you had once tweeted, sometimes having too much experience in the market is a liability because, you remember the previous IPO frenzies and you go back in time and talk about 96, 99, 2007, Reliance Power. Given the kind of subscription we've seen, Burger King, Mrs. Bector, is it time to get a bit cautious? Is there just way too much money, and when that tap just closes or even tightens a tad bit, we're in for trouble?
Yeah, so I think all these, if you go and analyze markets from all the big boxes, okay, of a speculative frenzy, feeding frenzy, I think all the boxes are ticked. But the beauty or the tragedy of markets is that you can tick all the boxes and yet get everything wrong. So, because you can do all the research, all the analysis, all the thinking, and you'll end up with absolutely a wrong perspective on markets or on the stock. And while all the boxes are ticked right now, I am loath to say that this will cause the end of, let's say, even a cyclical bull market. I think what it might cause is a big shakedown, which can be sudden, brutal, can surprise us. But I really do not think you can call the end of a bull market just yet. I think particularly for countries like India and emerging markets overall, which have had very poor last several years, I think they're just coming into their own. And I think you can continue with the speculative frenzy for quite a while before things become more sane. So it's not as if just because 2 IPOs or 5 IPOs got massive subscriptions and great listings means that it's the end of the bull market. It's a sign of caution, no doubt about it, and I'm the first person to say that. But I don't think it marks the end to the current bull market because India has not had a bull market. I mean, if you look at multiple year returns, you are still very, very low. You are still like 5-6% compounding, which is pathetic in a country which is beset with high interest rates. What with 5-6% in equity returns? So I don't think you've had a speculative frenzy on the stock market side anyway. I think it's building up. It can go on a lot longer before things, go south. So yes, be cautious. But I think, while it is rational that all boxes are being ticked, I don't think it just necessarily means that you will get a bear market coming around because we have been in a bear market for a pretty long period of time.
Okay, good to hear the optimism, especially today, Shankar. So as we wind this up, what do you think is going to be the big idea of 2021 or the big thing? I mean, people are talking about Atmanirbhar, PLI, and we spoke about this red hot QSR space, return of consumption. What will it be, 2021?
In my view, 2021 is going to be the year in which we will see investors who shunned emerging markets for the last 10 years, and it worked very well, come back with a vengeance into emerging markets. And again, I'm saying this, please, the takeaway from this should be that India will benefit because there will be a global shift into emerging markets. It's already visible. I think it will accelerate in 2021. And within the category of emerging markets, India has been a relative tepid performer. So I think there is a lot of headroom left for India to perform in 2021 and, come up the ranks. Because remember, before you go, last year Brazil was up 35%. Last year, 2019, sorry, not 2020. 2019, Brazil was 35%, Russia was 48%, India was up only 8% 2019. India has huge, headroom, for playing a catch-up rally relative to its emerging markets peers. China has had a terrific 2020. So I think the theme is going to be the laggards in global markets, in EM will have a very good 2021. And I think India belongs to that pack, which gives us a lot of room for optimism.
Shankar, thank you very much for joining in. Have a happy, healthy and fulfilling 21 for you, your family and everyone at First Global. So looks like the bulls will continue to party while the bears will sulk. We'll move on and get to our commodities editor. Manisha Gupta is waiting by and she's going to tell us what's happening in soft commodities. Why have you picked that for the first day of 2021, Manisha?
Because since morning you've been talking about on how the precious metals are doing and how the metal prices will continue to surge in 2021. But take a look at the soft commodities, excuse me, and they are running at multi-year highs as well. We have seen demand continue to be very strong. There are supply disruptions. The weakness in US dollar and the heavy stimulus measures have led to speculative positions gaining up here as well. And then apart from that, we are looking at inflationary pressures. And soft commodities is something that all of us use in our daily days. And this is there is a price increase that we have seen on this one. So take a look at the wheat prices and we are trading at a 6-year highs on that one. The cotton prices are trading at a 20-month highs. Rubber prices have gained up nearly 50% in 2020. And we have seen very strong gains come in for the edible oil sector. We actually have seen all-time highs in soybean and palm oil prices in this year. And we have seen 30 to 45% of gains come in 2020. The expectations for the next year are that you would be looking at higher prices continuing for cotton. That is because the production is on the lower side. The consumption is expected to increase. The demand for textiles is coming back here. Rubber prices, which gained up by 51% in 2020 because of the auto sales, also because of the rubber gloves demand, is expected to continue as well. Here as well, we have seen lower production but higher consumption numbers. The other soft commodities which have done quite well for themselves are sugar, tea, coffee, where as well we have seen 10 to 15% of gains in 2020. And the markets do believe that as in-house consumption continues to stay firm, the out-of-house consumption also increasing, you will see many of these commodity prices continue to raise higher, especially in Indian markets where we have seen the MSP prices also increase. That is going to be yet another supportive factor. So food prices, inflation is going to be yet another theme to keep an eye on, where you are expecting further gains. Okay, all right, Manisha, thank you very much for joining in, and of course wish you a very, very happy new year as well. So the commodity bulls are also raging. Well, we will take a very, very quick break on that note. We'll come back with lots more on the other side, so keep it with us.